Okay, so this is chapter 22 practice part 2. When we finished part 1, it cut off number 7 a little bit. So I just wanted to kind of go in and give a little bit more explanation on this one. So again, we started with the 400 units that they told us up here were the units for January. It told us that it requires 5 pounds of raw material for each unit. We need that if we multiply 400 times 5, we get 2,000 pounds. We had a goal of 400 pounds in ending inventory. So we add that to what we needed plus what we had, we have 2,400. We subtract out the 130 that they had for January 1. That means we had to purchase 22.70. They gave us a cost per pound of $2 per pound. So our total cost of direct materials was $4,540. All right, let's look at number 8. All right, so it says Tora Company plans to produce 1,020 units in July. Each unit requires 2 hours of direct labor. The direct labor rate is $20 per hour. They want us to prepare a direct labor budget for July. So we have 1,020 units, and we're going to figure out the labor requirements per unit. So it tells us that each unit requires 2 hours of direct labor. So 2 hours, and that's going to be multiplied by the number of units that we are putting into our budget. So 1,020 times 2 gives us 2,040 hours that we're going to need in total labor hours. If we figure out that our rate per hour, our labor rate per hour, they told us was $20 per hour, then that's going to give us a budgeted direct labor cost of $40,800. All right, let's look at number 9. Number 9, it says Extel budgets sales are $60,000 for April, $100,000 for May, and $80,000 for June. In addition, sales are 40% cash, 60% on credit. All credit sales are collected in the month following the sale. The April 1st balance in accounts receivable is $15,000. They want us to prepare a schedule of budgeted cash receipts for April, May, and June. All right, so let's look at our sales. Well, they gave us the sales in the first line. And for April, it was 60,000. For May, it was 100,000. And for June, it was 80,000. So then we want to figure out, okay, well, what was left in the accounts receivable? Well, that's going to be 40%. And we're going to calculate each of those because it says 40%. I'm sorry, it's going to be 60%. 40% is cash, 60% is credit. So we're going to take each of those numbers and 60% times 60,000, it's going to be 36,000. We're going to do the same for all three. 60% times 100,000 for May, we get 60,000. And then for June, we're taking 80,000 times 60%, and we're getting 48,000. So that's our part that we expect to be in accounts receivable. All right, well, let's look at where we're getting our cash from. Well, we have those cash sales that are coming in, and then we have the collections that are coming in from the prior month. All right, so 40% is cash sales for each of the months. So if we look at the difference, we had credit that went 36,000. The rest is going to be cash. So 60,000 minus 36,000, we have 24,000 in cash sales. For May, we have 100,000 minus the credit sales of 60,000. So we're going to have 40,000 in cash sales in May. For June, we have 80,000 total sales, 48,000 is in credit, so that means that 32,000 is going to be in cash sales. Then we have to look at what was the prior month's collection. All right, so if we look here, we had $15,000 that was from April 1st. So that amount is going to be collected in the next month. So we have $15,000 for that month. And then we're going to look up here. The credit sales in April were $36,000. We're going to collect them in May. So $36,000 gets entered in May. We had $60,000 in May. That's going to be paid in June. So we have $60,000 we're going to enter there. And we're going to end up with a total budgeted cash receipts for April of $39,000, total budgeted cash receipts for May of $76,000, and total budgeted cash receipts for June of $92,000. All right, so that's our cash receipts budget. So we're getting experience with lots of the different types of budgets. Our last problem is going to just kind of help us match up our terminology so that we understand the different terms that go along with budgeting. All right, so the first one, it says that it shows the expected cash inflows and outflows and helps determine financing needs. All right, well, let's look at our choices that it gives us. We see that we have budget, budgetary slack, budgeted income statement, cash budget, a master budget, participatory budget, sales budget, and top-down budgeting. So we can use those terms to select from. So if we look at here, which one shows the cash inflows and cash outflows? Well, that's going to be our cash budget. That's what tells us what cash we have coming in and what cash is going out. All right, let's look at our second one. A plan showing the units to be sold, the usual starting point in the master budget process. So how many are we going to be selling? Well, that deals with our sales budget, right? How many items are we selling? And then we can calculate the dollar per unit, and that tells us the dollar sales we're going to have. All right, our next one. A report that shows predicted revenues and expenses for a budgeting period. All right, well, we're looking for revenues and expenses. What do we find that on? That's going to be our income statement, right? So our budgeted income statement. So it's predicted revenues and expenses. That's what a budget is, right? We're predicting what's going to happen. Revenues and expenses, that's what we find on an income statement. All right, our next one. A formal statement of future plans, usually expressed in monetary terms. Well, what's this chapter about? That's what a budget is, right? It's a way that we're planning out what we want to do with our business, and we're putting it in dollar amounts. All right, number 5. Approach in which top management passes down a budget without employee input. So the top people in the company are putting together a budget. They're not asking the people at the bottom what they think they should do. That is going to be called a top-down budget. That's not always ideal, right? We want to make sure that we have that employee input because they're running the day-to-day business. They have the insight into how things are going to work and what's realistic and what's going to change those numbers. All right, number 6, a budgetary cushion used to meet performance targets. So that's called slack. So a cushion is where we have that slack in our budget that allows us to meet those performance targets. Not always a great idea when you're putting together a budget. You want to be very realistic. All right, number 7, a comprehensive business plan that includes operating, investing, and financing budgets. Well, comprehensive, that takes us back to that word master budget, right? That's going to have all of our plans of what we're going to do in our company. And then our last one, employees affected by a budget help in preparing it. Well, let's see. We want employees to participate in the planning, so that's going to be a participatory budgeting. All right, so that just kind of sums up some of our terms that go along with the Chapter 22 Master Budget chapter. So make sure you review the resources that are provided. There are several extra videos, and if you have any questions, please reach out. Thank you.